and welcome to this edition of the presentation of the difference between business credit scores and personal credit scores. We have Ms. Sabrina Davis from Fulton Bank with us today, and I will go ahead and turn the presentation over to Mrs. Davis.
Thank you, Ms. Tasha.
You're welcome.
Thank you, everyone, for joining this morning. We have some great information to talk about the difference between business credit scores and personal credit scores, and we're going to kind of take a journey together over the next hour and a half and discuss with you those details and give you some information that you can do some more research and find out additional details. But I really wanted to take a minute and thank the Women's Business Center at ODU and Tasha for having me today, for allowing me to come and present this material that we find is very important to entrepreneurs, or even if you're thinking about owning your own business. The importance of your personal credit and your business credit score is critical, especially if you are looking to borrow for your business, and whether you're looking for an investor or whether you are looking to seek out a bank to help you finance your business or take it to the next level, or even just find some working capital for supplies. Whatever the reason, your personal credit score and your business credit score is critical to that process. So I wanted to stop and formally introduce myself. I am a financial advisor for Fulton Bank. Fulton allows me to volunteer my time. This is not a sales presentation. This is specifically for informational purposes to help you build on your skills as you're looking to advance your business or grow your business, or even if you're thinking about starting a business. So as you know, a little bit about Fulton Bank. We are in 5 different states. We are a medium-sized bank. And the reason I talk about that is because in your BAIL team, your BAIL, your bank, which is the B in credit union, A, accountant, I, insurance, and L, lawyer. Those are all critical to help you partner with the success of your business and helping you with additional resources to make your journey as an entrepreneur a lot less frustrating, running smoother. So when I talk about the BAIL team, I am going to specifically talk about the B, which is the banks and the credit unions. So as you know, I'm with Fulton Bank. We're a medium-sized bank, and I've been a financial advisor for over 24 years. You know, when I think about your banks and your credit unions, it's really important to get out and interview your bank and credit union to make sure it's the right fit for you and your business. All banks and credit unions are different business models. We're not the same. So if you're a small business, and I think majority of the people on the call today is a small business owner, or you're looking to start your business, you're really looking for that bank that is very user-friendly to small businesses. You know, if you're in the startup phase, you're not knocking it out of the ballpark, those kind of things. So all banks are different. There are a lot of banks out there that only help the more advanced businesses, the ones that have been in business for more than 2 years and are generating a good revenue stream. So as you're interviewing your banks out there and your credit unions, it's important to find the right fit. So as I mentioned, I'm a financial advisor, been doing it over 24 years, and I'm going to share my value statement. So as you are interviewing the right bank and financial advisor, banker, to help you with your business, this will give you an idea of maybe the type of personality or person that you want on your team that will roll up their sleeves and be able to help you strategize in being able to walk you through how to help with your business if you're looking for funding. I also encourage you, as Tasha will put in the chat room, to follow up with additional presentation that the Women's Business Center has that's called the 8 C's of credit that will help you really dissect and get in tune with the different types of resources, products and services, things you want to think about as you are asking for funding your business, if that's working capital or helping you get started. Whatever project you have, I would encourage you to sign up for that. So my value statement, at Fulton Bank, our value statements guides everything that we do. And, my commitment is to treat my clients the way that I would want to be treated. And that's by fully understanding your pain points, even before recommending the solution. Getting to know you is critical for me to be able to help you. So providing the right solution is critical to address both short-term and long-term needs, and very passionate about and dedicated in helping my clients and becoming their trusted advisor. So as you're out there interviewing your banks and bankers that are going to be critical as a partner to the success of your business and helping you come up with strategies, that gives you an idea of who Sabrina Davis is. It gives you an idea of my experience with the bank. So as you're interviewing, you're probably going to want to find someone that has that same outlook to be able to help you with your business. So the top 3 reasons why, in my opinion, if a business were to have challenges or struggle or fail, the number 1 is they just don't know what they don't know. So congratulations for being here. Continue these classes that the Women's Business Center offers. They, in my opinion, are a great resource to give you information and really bring to the table some ideas of strategies and different things to think about to help you with the success of your business, when you probably and might not have known those things before you joined the call. So thank you for being here. Thank you for your time as you're taking time away from your busy schedule and your families to commit to this additional information. The second reason is lack of capital. Again, please sign up for the 8 C's of credit. That will help you understand some funding sources and ideas to help you strategize for if you need funding for your business. And the third is lack of planning. So as you are journeying through opening a business, if you've already been in business or you're just taking it to the next level, a business plan, in my opinion, is one of the most important pieces to the success as a tool for your business. It helps you really dissect and understand what are the things that you need to know in running a successful business. So the Women's Business Center is also a great resource to help you find a good place to help you with building and writing your business plan. If you're looking for additional funding for startup businesses, SBA, Small Business Administration, is a great tool and product out there to help that. Well, the SBA requires right off the bat a business plan. So that will help you know that if that is one of the products that you need to seek to fund your business or help you with your business, then it will help you understand, something and a tool that you've already gonna need in place. As I mentioned about that class that the Women's Business Center offers, the 8 C's of credit, one of those C's is your credit score. So we're going to talk specifically about the differences between business credit and personal credit. I'm going to start off with helping you understand what is your personal credit score. So with your personal credit score, some things that you will some things that will help you understand is, in a lot of cases, if you're a new business and you haven't been in business very long, or if you've been in business for a long time and you have not built a strong business credit score, and or you're not generating a large amount of revenue streams and showing that on your tax return, one of the things that is going to help you overcome not having a strong business credit score is your personal credit score. So that's why we talk about the personal credit score, to help you understand, even if you can't really rely on the score that you have for your business for several reasons, and we'll talk through additional reasons why it might be the case, then your personal credit score is something that the banks will ask you for in order to personally guarantee the loan. So with having said that, I'm going to take you through the different algorithms that are encompassed with the personal credit score. So as you can see here, there are 5 weighted factors your credit score is based on. 35% goes to the payment history, 30% goes to available credit, 15% goes to your length of history, 10% goes to the type of credit you have, and 10% goes to your inquiries. But there's a lot more to each one of these algorithms that I'm going to take you through and kind of help you understand in detail how these 5 algorithms work, and dissect them, break them down, and then give you some best practices to help you overcome any of these challenges that you might be facing. Whether you're joining the call to understand how your credit score is good, or whether you're joining the call because your score is challenged, you will find a lot of value in the next 2 hours to help you understand the differences on the algorithms to help you keep your good credit score, and if it's challenged, things and techniques that you can put in place to overcome that challenged credit score. So let's get started. So things I want to talk to you about before we start talking about the first algorithm are, let's talk about Credit Karma, the credit union, Bank of America, Capital One, that program, and your FICO score. And a lot of questions that I get from my clients is, why is my FICO score, or these scores that these programs and different third-party resources telling me, different from my score when I applied at the bank and I got approved or declined, and they sent me a letter telling me which bureau was pulled and what your score is, and they also recommend at least 2 to 3 algorithms that you can work on to make it better. So the question is, why is that score different? So if I go and log on Credit Karma, which I really like because it gives you an idea of 2 of the credit bureaus, let me tell you what your FICO score, or these scores that are out there that you're seeing and that they are recommending that you have. Here's what happens. Credit Karma and those third-party resources will reach out to the credit bureau and do a soft pull. It does not hurt or pull or serve as an inquiry on your credit bureau. Basically, they're taking those trade lines on your credit bureau, plugging them in to those algorithms, and taking their best guess at what your score is. It is not your score. The only way you can get your actual score is by applying at a bank or a credit union or a lending institution for a product, and you're getting approved or you're getting declined. Because we are, as banks and credit unions and lending institutions, required mandatorily and regulated that we send out a letter if we're pulling your credit, letting you know which credit bureau that we pulled, what your score is that the credit bureau said it was, and a couple of algorithms that you can work on to make it better. So I wanted to be very transparent in helping you understand why those scores and those FICO scores are different from your your personal credit score when you're getting approved or declined and the bureau sends us what your score is. So something else I want you to keep in consideration is there are 3 credit bureaus, Equifax, TransUnion, and Experian. Most of you probably know that. And be careful who you're going in business with. If you are sharing 20% ownership of your business with someone else, and you need any borrowing from the bank for your business, we will usually ask you to personally guarantee it, and whoever is an owner of 20% or more to also sign as a personal guarantor. The debt is in the business name. It does not show up on the personal credit bureau. However, we will typically look at your credit score from one or all 3 of the credit bureaus to see what and how you've been paying in the past. So what is a score? Basically, you think of a credit score as far as a personal credit score, a business credit score. That really is helping the bank determine if we can trust you or not. At the end of the day, the bank just wants to get their money back, or the credit union. So think of it as a relationship. So if I were to think of an example, you know, as I'm dating somebody, I'm married now, of course, happily married. And as I'm dating somebody and I go on a date and it's the first time that we're having dinner and he asks me to marry him, there's no relationship there. We haven't built any trust. I don't even know who he is. So the point I'm trying to make is there's no relationship there. But as we build that trust, as we work together as a couple, as I get to know him, then I either decide I'm going to trust him, and when he asks me to marry him, then I can say yes or no based on that trust. That's kind of like what a personal credit score is. At the end of the day, for the bank, it's based on the relationship, and one of the things that we look at is the personal credit score to decide if we can trust that relationship, because if you're not paying your personal debts, then we are going to assume you're not going to pay us. And at the end of the day, it breaks that trust. So in some cases, it doesn't mean that we forever won't trust you. It just means you need to build on that relationship stronger and prove the trust that at the end of the day, the bank will get their money back and that we can trust you. And that's kind of the way that I wanted to describe that. So let's go into the first algorithm, which is 35% goes to the payment history. That really equates to the record of your on-time and late payments, right? But it's based on date of last activity. So as I think about this particular algorithm and your payment history, some things I want you to think about: dispute on your bureau if there's any errors. You can even piggyback on somebody's good credit, but be careful. You can piggyback on somebody's challenged credit. And if you're new to credit, a secured credit card to help you build that relationship to show to the bank you can be trusted is a great way to start that. And I want to give you an idea. I'm going to take this particular algorithm, 35% payment history, right? Well, I'm going to take it a step further, and I'm going to discuss what I want you to keep in consideration. Please know this is a computer. It's algorithms. It's not a human being. So the computer can only see what you're putting on it in history of your trade lines. So if you're not using any credit at all, there's no relationship. There's no history. We don't know if we can trust you or not. So it's important to build on that history and that relationship. So I'm going to give you an example. Let's say you have a $10,000 judgment that's 3 years old. That's going to weigh less than your Pizza Hut collection that you just paid off from 5 years ago for $14. And you're saying, well, that doesn't make any sense. Remember, this algorithm is based on your date of last activity. So that $10,000 judgment and that $14 collection that's 3 to 5 years old that has not been touched, the algorithm is not picking it up because it's so old. You can even have a 700 credit score with having this particular situation. But as soon as you pay on that $14, then the algorithm picks up that you've got that collection that you just paid for $14, and you are plummeting your score by 35% at that given moment. So a lot of times when we're face-to-face, I'll usually get somebody to say, well, then I'm not going to touch it. I'm just going to go get a loan from the bank, and then I'll go back and pay it off. Well, that's where the human being comes in. That's where the banker is going to pull your credit and see that you have judgment and collections. And it's going to be an auto decline, because if you're not paying them, the relationship is broken. We feel like you're not going to pay us. So I want you to take that in consideration. And this particular algorithm, just as one additional reminder, this is based on date of last activity. So keep in mind, you want to build on your credit. You want to build on that history. You want to show good payments and on time. So then when you do come to the bank, we'll take in consideration that, oh, well, they've been paying before, and I know that they'll pay us back. Let's go ahead and move to an approval. So let's say this category is a little challenged. Here are some things that I want you to keep in consideration.
Sabrina,
let me go back to the screen. Yes.
I apologize. There is a question in regards to what you just explained. The question is, the person does not understand the example. What is a $100,000 or what is a $10,000 judgment, and what is a Pizza Hut collection? So I'm not sure if that was very clear.
If they want to come off mute and give us a better idea of what their question is.
Yes. Lisa, do you mind coming off mute for me?
Okay. None of that made sense to me at all. I don't understand what's a judgment and what is a Pizza Hut collection. It's just, there's no like correlation in my head to what you're talking about here.
I really appreciate the question, because this is your time, and I want to make sure that if there is any confusion, I want to thank you so much for standing up, raising your hand, and asking, so we can talk through that, because I want you to know I value your time, and what is most important to me is that I'm adding value and not leaving you with any confusion. So this particular example is somebody that has some challenges on their credit. So a judgment is quite simply a trade line that was agreed upon with the lending institution, and that consumer did not pay on time or at all. And then what happens is that lending institution goes in front of a judge and says, look, the consumer didn't pay. I need to be able to collect on them. They're not keeping their agreement. And the judge will order a judgment or a collection. Then the consumer or the lender has the option to sell that collection or judgment to another third party to collect, and that's usually what happens. So you'll have a collection agency calling to try to collect on that debt that was never paid. And typically there's additional fees involved. Sometimes they will reach out to your employer and try to, based on your paycheck, they'll garnish wages and force you to pay a certain amount. They may also decide to put a lien against any property if there's a judgment or collection. So those are different recourses that a third party has in place, or the lending institution has in place, that if you decide for whatever reason that you're not able to pay, and let me say this right now, there is no judgment. You can never speak into someone's life of why they might have a challenging situation to where they're not able to pay. It could be an unexpected divorce. It could be an unexpected loss of a job. It could also be a situation to where you've had unexpected medical expenses. that has caused you to not be able to pay as originally agreed. So this example is somebody that has unfortunately being put in that situation. The judge has already ruled. Now they're trying to collect forcefully through a collection agency or lien against the property or garnishing wages. In this particular example, you can have any one of those situations where you have a judgment or a collection, and as long as you're not paying on it, the credit bureau starts to not see it after a couple of months, because what happens is your score is based on these algorithms, and if it doesn't show that you're paying on it, you could have a inflected score of 700. But as soon as you pay on that, my point is your date of last activity. In this example, you're paying on the $14 collection that you haven't touched over 5 years. Let's say your score is 700. It doesn't see these judgments and collections because you haven't paid on it. But as soon as you do, it will decrease your score by 35%. Because this particular algorithm is based on the type of credit and how you're paying. So let's go back. This one is based on payment history. This is the record of your on-time and late payments, but this algorithm is based on date of last activity. So the date of last activity, but if you're not using credit at all, as another example, you could be negatively impacting your score by 35%. Does that clear that up?
Yes, it did. Thank you.
Thank you for the question. I appreciate it. Tasha, thank you for letting me know.
You're welcome.
All right. So moving right along. So let's talk about some strategies. Let me go back. So let's say you have some challenges on your credit history. Or maybe you're brand new to credit and you haven't built any date of last activity and you don't have any credit that you're utilizing because it's challenging to get approved for building credit, especially when you're newer to credit because that relationship hasn't been built yet. So some things that you can do, you can be added as an authorized user to someone's existing credit card, as an example. I'm going to give you another detail. Let's say I have a grandmother. She has a $10,000 credit card she very rarely uses and pretty much keeps it at a zero balance, and she's had it for 20 years. I can call my grandmother and say, hey, I'm trying to build credit or reestablish credit. I've had some blips on my credit bureau, or I'm brand new to credit. Will you be willing to add me as an authorized user to that credit card that you have for $10,000 open to buy or limit, and you've had for 20 years? And she says, yeah. So all you have to do is call down, is call down to the institution where she has that credit card and add you as an authorized user. They're going to ask for your social security number and your date of birth, and then they're going to ask for one last question. Do you want me to send your granddaughter a card to use? And she can quite simply say, no, I just want to add her as an authorized user. There's no risk to your grandmother as long as you don't have the card to use. You also, as an authorized user, have no rights to that card. So even if you're trying to call and find out what a balance is as an authorized user, the institution will not give you information because you're not a joint person on the card. You're just an authorized user. But what you're doing is you're piggybacking on grandma's great credit over the last 20 years for that credit card. And if you're newer to credit, again, you're piggybacking on grandma's credit card that she's had over the last 20 years that she's been paying really well on. Be careful, because if my grandmother didn't pay on time, or she has a really high limit, let's say her limit is $10,000, she has a $9,000 or $10,000 balance, that's not helping you. You need to piggyback on somebody's trade line that has a low balance, less than 10%, and has had that card for a while, so you can piggyback on that. So the next algorithm that we're going to talk about is the 30% goes to your available credit. This quite simply means your credit limits or opened buys minus the amount you owe needs to be at 30% or less. So I'm going to give you another example. Let's say you have a $2,000 limit Fulton Bank credit card. You have another $2,000 limit Bank of America line of credit. And you have a $1,000 limit Capital One credit card. So that gives you $5,000 that you could go all over town and spend, right? A total sum. But as soon as you hit a $1,500 balance, you have decreased your score up to 30% immediately. And here's the reason why. You want to stay in the range of 28 to 30% utilization on that $5,000 total sum that you have. You're open to buy or limit. So in this case, it's $1,400 or less that you want to have a total balance on your credit cards. As soon as you go over that $1,400, you're decreasing your credit score by 30%. Both the first and second algorithm are huge numbers, a big number to your credit score. So some things that you want to think about: don't have too much open revolving credit at a zero balance, because it will also be taken into consideration when you're applying for a loan or a line of credit, how much additional lines or credit cards you have open, and then are you using them properly. So you want to use 28 to 30% or less of your balance of revolving credit, and we gave you that example. So let's say you've got yourself in this situation to where, let's say you have a $1,500 balance, right? And you've decreased your score by 30%. Some things that you can do and put in place to overturn that or change it. One of the options is open another credit card with another balance. That may or may not be something you want to take in consideration. It may be something you want to take in consideration if you're trying to save on the rate as far as one of those 20-month zero interest credit cards, and maybe what you're paying right now is 28% on the rate. So you can see how maybe opening another credit card that's transferring the balance over to save you money that you don't have to pay on that rate is an option. Call the existing credit card company that you have and see if they will increase the limit. Because if they increase that limit, it could throw you under 30% utilization. Ask a family member or a friend to allow you to be an authorized user. So let's take a minute and talk about that. Remember we were talking about Grandma and how she was going to add me as an authorized user to her $10,000 line of credit card with a zero balance, and she's had it for 20 years. So as the $10,000 as an authorized user is added to my bureau, that total is not just $5,000 at that time, it's $5,000 plus the $10,000 that she's adding me as an authorized user, limit or open to buy. So if I have a $1,400 or $1,500 balance, I am way under 30% utilization on that card. And that will increase my score by 30%, usually very quickly. This is a fast algorithm. The rest of them are a little slower. They want to see how you're averaging based on the type of trade lines that you have. So, but this one, as soon as you're under 28% utilization, you start trending of increasing your score up to 30%. Or quite simply pay down the balance to $13.99 or lower. The lower your balance is on your credit cards, under 30%, the higher that you work towards the 30% increase on your score. So let's say you have a 10% balance or less. Your score will reflect very quickly and it's a lot faster. But let's say you're right at 28% utilization. You're going to trend or get back up to the 30%. It might take a little longer. So the next one is 15% goes to your length of history. This is the time elapsed since each account has been opened. So you've heard that old chestnut, well, I'm going to go and shut down a bunch of my credit cards because I don't use them anymore, and I'm never planning on using them anymore in the future. So I really don't want that on my credit bureau any longer. Well, as soon as you close that credit card or line of credit, you are possibly decreasing your score by up to 15% because it wipes out the history of that card. Now, if you've had derogatory credit on that history of whatever credit card or line of credit and you close it down, it's quite the opposite. The negative information that's reported to the Bureau will stay on your Bureau. Typically, like if you're using Credit Karma, it'll give you an idea of the month and year that negative history will fall off your Bureau. So remember, don't just close your accounts if you're not using them. You can call and decrease your limit instead. Keep your cards open or lines of credit open for history, especially if you've had it for a long time. So remember Grandma, she's had that credit card for 20 years and she's paid on time and everything looks great. When she adds me as an authorized user, as the example I gave, I am then piggybacking on that 20 years that she's had that credit card or line of credit that she's asking me, or I'm asking her to put me on as an authorized user. Another option for you to consider. The next algorithm is 10% goes to the type of credit that you have. Mortgage loans are heaviest weighted. Car loans, secure loans, unsecured loans, any fixed rate, fixed payment, at the end of the day, the loan is done and it closes. That's second heaviest weighted. And third heaviest weighted is your credit cards and lines of credit. So something that you may want to consider is a credit card debt consolidation or a line of credit debt consolidation. That example of the $1,500 balance that you have on a $5,000 limit, you can take that $1,500 and put it on a fixed rate, fixed payment loan debt consolidation and increase your score by up to 40% at that moment. Because this algorithm is you're taking it off the credit card and you're putting it on a loan that would increase your score up to 10%. And then you're also paying off that $1,500 balance in your 30% utilization category. Once you've paid that down to zero and put it on the loan, then your balances on your credit cards are zero. So you've increased your score up to 30% on that algorithm. So together, these two algorithms, when you do that, is 40% increase to your score, as an example. So 10% goes to the type of inquiries that you have. So if you have a hard pull, meaning you're applying for an approval or a decline for a loan, line of credit, any lending institution, and they are doing a hard pull on your credit bureau, it stays on your credit bureau 18 months to 24 months. Most consumers think it falls off in 12 months. as an inquiry. Some things that the Bureau will take in consideration, if it's all within 30 days, like you're looking for a mortgage or a car loan, it will probably fall off quicker. But be very careful. Don't take more than a week or even 2 weeks to decide what lending institution you're going to go with. I know you're probably rate shopping. You're trying to find the best deal, but do that within a short period of time, because if you spread that out, the algorithm thinks that it's different inquiries, and you could be causing that inquiry to stay on for up to 24 months. Instead, figure out where and whom and what rate that you're going to be getting, make that decision, and pull the trigger. Don't let the car dealership pull your credit 18 to 20 times, especially if you have a good credit score, because they should know up to about 2 to 3 pulls who they will be able to get you financed with at the best rate based on what your score might be. Now, they can't guarantee it until they pull your credit bureau at least one time to see what the score really is, but you can give them an idea of what your score is, especially if you're using Credit Karma or any additional third party to give you an idea of what your FICO score is, because they're taking their best guess. They're usually only 20 to 30 basis points away from your real bureau score, and in some cases, they're spot on. So it gives you an idea of what your score is, and you can give them an idea of what your score is. So some products that you may want to consider to either save you money, make you money, help build your score, help rebuild your score, and some products that I want to walk you through as you're out there interviewing your banks. If you're new to credit or rebuilding credit, a secured credit card is quite simply this. You're giving the bank money to hold as collateral for as long as you have that card to help give you that same amount that you gave them for an open to buy to help build or rebuild credit. Let me give you an example. Right now, Fulton Bank has a secured credit card. We're actually waiving the annual $39 fee because of the pandemic. And we're giving you the option of putting $300 to $5,000 down on the credit card. We're going to hold that as collateral. And then we're going to give you an open to buy or a limit for $300 to $5,000, depending on how much you put down on the card. Then you are able to go around and use that credit card to help build history and establish credit if you're new to credit, or if you need to use credit and you don't have any other resources, or you're trying to rebuild that credit. Once you've had that card for at least 12 months, we will take in consideration giving you your money back and making that an unsecured credit card. You've built history. You've built on that relationship. So then now we trust you, and therefore we're going to give you more options to do borrowing with Fulton Bank. So that's one example. Then you've got a business credit card. A business credit card can help establish and build business credit. It can also serve as a business supply option to borrow, even if you're a startup business, because we're going to ask you to personally guarantee it, but it's going to be in the business name. The reason why the bank asks you to personally guarantee it is because if the business were to fail, we still want to make sure we get the money back. So therefore, we ask you to personally guarantee it. It will not be on your personal credit bureau. It will show up on your business credit bureau. In the next part of this presentation, we're going to talk more about the business credit score. But let me give you an example. Fulton Bank has a business credit card that has no annual fee. You can be a startup business And right now we have a special going on for 20 months, no interest. And you can get approved up to a possibility of $25,000. So you see how easy that can be, but let's take a minute, and I want to caution you. Just because you can does not necessarily mean that's the right strategy for your business. If you were to pull the trigger on that particular product, as an example, I would encourage you to have a strategy to make sure that you take whatever balance that's going to be on that credit card, and since you're getting 20 months no interest, try to pay that off in 20 months. Take the amount that you're borrowing, divide it by 20, and then that should be your payment. Credit cards and lines of credit were never meant for long-term financing. They were only meant for short-term financing. Now you know why the algorithm that we talked about for your personal credit score is so high, 30% on lines of credit and credit cards, and how you're using them. Because if you're using them in the wrong capacity, the Bureau is going to negatively impact you by decreasing your score up to 30%. So then you've got consumer credit card balance transfers. That can help you save money on interest. So let's say you have a credit card right now and you have a $5,000 balance and you're paying 19.49%. For that example that Fulton Bank has is a balance transfer on a consumer credit card, and it's 20 months no interest on purchases and on balance transfers. So you can transfer the balance over. There is a 3% transfer fee, but it saves you a large amount of money. And again, I would encourage you to have a strategy that if you use that type of product, then you, for 20 months, have a strategy to pay that off to zero or as close to 20 months as possible. There is what they call the consumer credit card cashback rewards. As another example, Fulton Bank has a 5% cashback, 2% cashback, and 1% cashback on one of our credit cards. It's called the Cashback Rewards credit card. It's 5% cashback on gas, 2% on groceries, and 1% on everything else. There's no annual fee. It's actually the strategy that I use. I make money off of my credit card because I put all of my monthly expenses on there. I wish I could put my mortgage payment on there, but they don't let you. But it's money that I've budgeted for and already have in my checking account. At the end of the month, when I get my statements, I pay it off to zero every month. To give you an idea, for me, I average around $600 cash back every year on something that I was going to be paying for anyway each month. But they came up with the game. I just figured out how to play it. So that's an example of cashback rewards. So some of you may do a lot of traveling. There are rewards for traveling. That can help mitigate expenses for when you're trying to travel, when you're looking for a ticket to board a plane, and as you're using your credit card, hopefully you're paying it off each month, and it's building up those rewards. So when you go to purchase your ticket, it could pay for it. Or it could pay for that and have additional rewards in the future that you haven't used for the next ticket. So those are some ideas on different types of credit cards that are out there that can help you build credit, whether it's personal or business, reestablish credit, and maybe save you money, or in some cases, like I do, make you money. So they're out there. But again, I caution you, just because you can does not necessarily mean you should. If you're the type of client that does not budget effectively, then the cashback rewards and paying it off every month is maybe not the card for you. And the card for you would be to save the money, which is the 20 months no interest. I want to take a minute and say, whether you choose Fulton Bank or not, I'm here to help you. At the end of the presentation, I'm going to give you my contact information. I'm here to help in any way that I can. I do credit counseling. I also will sit down with you one-on-one and strategize with you how we can turn something that might be negative into a score and how can we get that as strong as possible. If you're interested in any of those products that what I talked about, we can take care of that right over the phone. Just reach out to me. But I want to really talk to you about is the right strategy for you, just because that product is something that Fulton Bank offers, or as you're out there interviewing the different banks and finding out what products, additional products are out there, I'm happy to help, again, whether you choose Fulton Bank or not, to make sure that it's the right solution for you as a trusted advisor. What is a good credit score? So this is from myfico.com, and this gives you an idea of 680 and above is going to give you the better score, better pricing for any borrowing that you need. It's probably going to save you on the rate. It'll save you on fees. And if your score is anywhere from, you can see here, about 600, I would say 590 to 680, you might still get approved. You might get declined. Your rates are going to be a little higher, or your fees are going to be a little higher. It's expensive to have a challenged credit score. So you want to try to make that as strong as possible. And to the banks and lending institutions, risky is definitely anywhere from 590 and below. These are 5 tips of improving your credit score. You want to get copies of your credit report of all 3 bureaus at least one time per year. Right now, the only place that you can get that for free is annualcreditreport.com. Please write that down, annualcreditreport.com. Right now, they're giving you unlimited pulls. Before, they would only let you do that one time per year for all 3 bureaus, and then they would charge you $76 for additional copies. But right now, because of the pandemic, they are allowing you to pull your bureau as many times as you need. Please know the bureaus update every 30 days. So if you're going to ask for another pull on your bureau trade line from the credit report, whether it's Equifax, TransUnion, or Experian, do it 30 days after you've gotten the first report that you've asked for. Number 2, pay your bills on time. Come up with a good budget technique. Let me give you another example. Me personally, I have about 7 different checking accounts. I have one that pays my bills, and quite honestly, it's the money that I put in my bill account, so then I pay my credit card off each month and have that prepared and budgeted to know what I've spent on that card so I can pay it off. I'm just trying to make money on it, the cashback rewards. I also have one for vacation. Every year we plan out our vacation a year in advance, and I know how much it's probably going to cost us when we travel. So I take that, divide it by however many months that I have left, and I save that in an account to be prepared for the expense instead of borrowing for it. The other is Christmas. I do the same thing and budget for Christmas. I have one for my grandchildren's account. I have one for my car. You know, I budget for my expensive tires, and I also budget for unexpected emergencies for if my car breaks down. It's an older car. I also budget every 6 months to pay for my insurance because they decrease the premium if I pay every 6 months versus every month. So I want the decrease in premium. So I save every month, divided by 6, what my premium is going to be in 6 months. So then in 6 months, I'm prepared to pay that bill. But as you're out there and you're interviewing the banks, you're going to want a bank, if that's a strategy that you want to put in place, that does not charge a minimum balance requirement for their checking accounts or a monthly maintenance fee. Again, as an example, Fulton Bank does not charge for the minimum balance or monthly maintenance fee on the business or the personal checking accounts. So, as an example, Fulton Bank would be a great resource to be able to do business and build that relationship with if you're looking for a budgeting technique to be prepared for expenses instead of borrowing for them. Number 3, learn the legal steps to report your credit report, or to correct your credit report. So in number 1, you see annualcreditreport.com. All you need to do is if you need to dispute anything, whether it's your name, address, any trade lines, then you can do that through annualcreditreport.com. Number 4, understand how your credit score is determined. You can cross this one off your list because now you understand how your credit score is determined on the personal level. And then also be aware, it's not a scam, but be aware of paying an institution or a business to repair your credit. There's nothing special that they can do any more than what you can do. You can repair your own credit. And that even starts with calling the institution and working out a payment plan. And you can do it for yourself instead of spending money to have somebody do that for you. So I'm going to leave you, before we move on to the business credit score, a restrictive endorsement. So we talked about collections and judgments back on the first screen. And thank you so much to the person, I forgot her name, my sincere apologies, that asked the question about, can you clarify what is a collection or judgment? But let's say you are in a hardship, divorce, loss of job, unexpected medical expense, and might as well throw in student loans as well. And you're and you are with a collection or judgment, and you're looking to pay that off fully, or you're looking to make your last payment, take a snapshot of this. Take out your phones, take a picture of this. When you're sending the check to pay it off or to make your last payment, and it's going to be paid off, on the back of it, underneath where they sign to endorse the check, this is called a restrictive endorsement. You can write endorsement and clearance of this check payment settles all claims by creditor against in full, and creditor further agrees to delete all derogatory credit information reported to all credit reporting agencies in full satisfaction of any and all debt owed to creditor. They are bound by this disclosure once they sign the back of the check and endorse it and cash it or deposit it to the bank. You will then go down to your bank and get a copy of the front and back of that check. That serves as a receipt that they are going to take this off your credit bureau. This is not from me. This is from an attorney. So please know that the attorney says if you need to show that you've paid that off and for some reason they threw it back on your credit bureau, you can send a copy of the front and back of your check to the credit bureau and have them consider to remove that debt off your bureau. So Ms. Tasha, before we move on to the business credit part of our presentation, would you like to stop and take some questions at this point for the Personal Credit Bureau?
Yes. All right. Let me know when you're ready for the first question.
And I'm ready.
Okay, the first question is, good morning. In the instance you mentioned with the secured credit, if you secure a 500 limit and I spend $140 a month and pay it off every month, will this help build my score? Or on a secure credit card, can you spend the entire secure amount each month? Can you?
That's a really
Oh,
great question.
and then that's
Yes.
another part of the question. Can you explain the cashback example again?
Oh yeah, where you can make money off the credit card.
The first question, right? The first question is in regards to the secured credit card and the spending each month. Can you explain
Well,
that?
I would like to say thank you to who asked that question because it tells me you were paying attention.
Nadine.
So yes, you've done your calculation. Even if you have a secured credit card, you gave me $500, I'm using it to secure your credit card. You still want to make sure that you're keeping a balance. Hopefully you're just paying off the balance, because I don't want you to have to pay money in order to build your credit. I only want you to build that history. So if you want to use it, pay it off every month, use it, pay it off every month, and we're still holding the $500, that will not negatively impact your algorithm, the second one, of utilization. But let's say you're going to keep a balance. There's going to be a rate that you pay. And I'm glad you used $140 because that tells me you're under 30% utilization. And as long as you keep under 30% utilization from month to month that you have that balance, it's not going to negatively impact that algorithm and decrease your score by 30%. So I'm so glad you asked that question. It's a great example. And then the cash rewards. So at Fulton Bank, the one that I have is 5% cash back on gas, 2% cash back on groceries, and 1% cash back on everything else that does not meet those two other categories. I take normally my debit card and go to the grocery store or buy my gas, and it comes directly out of my checking account, right? Well, instead of doing that, I use my Cashback Rewards credit card, and I put all of that on there because I'm going to get 5% cash back on any gas purchases, 2% on any of the groceries, and 1% on everything else. And I'm averaging cash back in my pocket about $600 to $700 every year when I do that, instead of using my debit card and money coming out of my checking account. But what I do, and hear me when I say this, I pay off my balance every month. I do not carry a balance. Because if I carry a balance, that 5% cash back or 2% cash back or 1% isn't going to mean a hill of beans if I'm paying 19% on carrying a balance. I pay off every month the balance to zero, and therefore I make money on the credit card. Great question.
All right. And the next question is from Erica, is what is the right time to come off of someone's card as an authorized user?
That's another great question. I would say the good time to come off as an authorized user is when you've reestablished and rebuilt or built your own credit, and you can get your own unsecured credit card or line of credit. And you've built some history, because when you're piggybacking on somebody's card as an authorized user, remember all those categories that you're piggybacking on. You're piggybacking on their limits. You're piggybacking on their good history that they've had. You're piggybacking on, a lot of different things. So once you've built that for yourself, then would be a good time to just have them take you off. I would say at least 24 months of rebuilding and reestablishing good credit. And then once you can get your own card unsecured, then, or your score is where it really needs to be, it's then a moment of time you can consider, let me take them off.
Okay. And this is going back to the cash back example. So even with the cash back, you must have a credit line to accommodate the purposes to keep 28% usage.
Yes, because that cash back is meant to pay off every month anyway. However, even if you're going over the 28% utilization, but you're paying it off every month, that will not negatively impact your 30% category of the algorithm, the second one we talked about for utilization. The only time you need to worry about the balance that you're keeping is if you are keeping it and not paying it off every month to zero.
Very good. That was the last question. Unless
Oh,
someone
okay.
is not able to place the statement in the chat.
Do you
Okay,
want to
here's
see
one.
if
I have-
anyone? Oh,
Yep.
okay.
We have another. How soon will my credit be impacted once I place an authorized user on, I guess, on the credit card? How soon will, okay, Teresa, do you mind? I think the question says, how soon will my credit be impacted once I'm placed as an authorized user? That's what it is.
Okay. So the answer to that is unique to each person's credit bureau. If you have judgments and collections, you need to pay those off. You've got to rip off the Band-Aid, got to get it cleaned up, got to pay everything, get caught up. And then once you've done that and you have somebody that has added you as an authorized user, you will start to see your score increase and climb in the right direction 60 to 90 days after they have added you. But let's say you have collections and judgments and you asked somebody to add you as an authorized user while you're cleaning up the credit. It still will increase your credit score, but remember, you still will have a challenge getting approved as long as the judgment or collections have not been paid off. Not that that's your situation, but I wanted to speak to a couple of examples. So the answer is 60 to 90 days after you've been added as an authorized user is when your credit score starts to reflect in the positive way.
All right, anyone else? Okay.
Great question, Tasha.
Oh, very good. That was Teresa. So this next one, it seems the credit score is extremely fluid. This is truly, oh, it is truly a chess match.
It is, because they all work together. You know, one little thing might negatively impact something else, and that's why it's so important to find out. Now that you know, congratulations, and so excited you were on this call. It really is a chess match because you have to think ahead about what you're getting ready to do before you do it. Just because you can doesn't necessarily mean you should. And then they all can, you know, impact each other. So what a great, great opportunity for you to pass this on to family, friends, children, because I can't tell you how many times over the 24 years that I've been doing this, I have had somebody to say, I wish I knew this back when I was in high school or when I was in college, then I wouldn't have to worry about this, that, or the other. Or, you know, they put themselves in a situation that they just didn't know what they didn't know. So great comments. I appreciate that.
That was it. That's all the questions.
Okay. So it is about 8 after 11. Let's go ahead and move on the business credit report. Thank you, Tasha, for being the spokeswoman, beautiful spokeswoman that you are, and helping us with the questions. And thank you to everybody on the call for asking those questions, because I promise you, your questions are helping somebody else on the call. So let's talk a little bit more about the business credit report. So it's different. It works different than the personal credit report. And whether you're new entrepreneur or you are or have been in business for a while, it's important for you to understand that building business credit is critical to moving forward and putting business lending and borrowing in the business name. Again, as you're getting started in your business, you can use your personal credit to be approved for business requests. Let me talk a little bit about that. Establishing credit with a credit report service in the name of the business is extremely important. And suppliers and shipping companies review the credit history of your business when deciding whether to grant a line of credit. And that's important if you have suppliers or shipping company, because they will give you a 60, 90-day payback, no interest line of credit for their supplies. So you don't have to do the borrowing. So in some cases, those suppliers and shipping companies, they will review your credit to see if that relationship has built strongly over paying back any business debt that you might have. If you're newer to business debt, some strategies that I'm going to talk to you about, and one we already have, is a business credit card to help build business credit. Is a great resource. We talked about the business credit card that Fulton Bank has, no annual fee, 20 months, no interest. You can be a startup business. And really what you're using is your personal credit to decide if you're approved or not. So let's take it a step further. Some things I want you to think about. These are things that are going to be included on information on your business credit score. So information provided by banks, lenders, investors, landlords, other businesses, and government agencies report to the credit bureau for the business. Also includes items such as analysis of your credit worthiness, insurance underwriting, employment, certain licenses, continued credit terms, and business needs. Also, the agencies collect information on bank accounts, payment histories, judgments, collections, tax liens, and unpaid lawsuits. The credit reporting agencies also identify the business by using the tax ID number, previous addresses, and former names. And I know you have more questions. I just wanted to give you an idea of some things I want you to think about as you're going to take this journey with me on what is a business credit score. So how do you start the process of building a credit file for your business? Well, step one, you want to obtain a tax ID number from the IRS. This is your EIN number or tax ID number. They're one and the same, and you get that from irs.gov when you are opening your business entity. If you are a sole proprietor and you're using your tax ID number as your Social Security number, I would highly encourage getting a separate tax ID number and not to use your Social Security number. You can still stay sole proprietor and get a tax ID number or EIN number from the IRS. Obtain a unique identification number for your firm. It's called the DUNS number, Data Universal Numbering System. You can get it through dnb.com. They also have a great website. Another resource is NAV. That is a great resource to continue helping you build your business credit. And that's called NAV. N as in Nancy, A as in Apple, and V as in Victor, or dnb.com. You can become a subscriber of a reporting service by submitting financial statements and registration information on your business to one of the three major national credit reporting agencies, and we're getting ready to talk about what they are. So see how it's different? Instead of everything being reported to the credit reporting agency from the lending institution, like your personal credit score, you have control over some of the reporting if you decide to report to the agencies yourself. You can become a subscriber of a reporting service by submitting financial statements and registering information about your business to the reporting agency yourself. You don't need Dun & Bradstreet to do it or NAV to do it. You can do it yourself. To ensure the most favorable credit rating, include the strongest or most well-established open trade line of credit accounts in your registration information. The reporting agency will contact the creditor you list for the most current information. So if you're deciding that you're going to send the agency, the credit reporting agency for the business, information about how you're handling your payments, they're going to reach out to that third party and find out what the most current information is. Are you paying on time? So 3 key business reporting agencies, the 3 that are out there: Dun & Bradstreet, Experian Business, Equifax Business. Each of these agencies has extensive information on their website regarding their services. Now, keep in consideration, typically they're going to charge you if you want them to help you build your business credit score, but you can do it on your own and report to all 3 agencies if you want to yourself. You can check with a sales consultant about pricing and additional services. So that's what I'm talking about. They charge a fee if you want them to do it for you. Most banks and lending institutions, when they get your credit score for the business, is using Dun & Bradstreet. Some additional factors and information that is included on your business credit score is your commercial or business credit risk, potential for failure indicators of the industry, credit filing and existence for security property. So if you have any property used as collateral, usually it's on your business credit report. Your business ownership. Remember I talked about if there's more than 20% ownership, one way that we can really justify and test if you are being truthful is we'll pull the business credit score. It will tell us who the owners of the business are and their percentage of ownership. Other businesses that you have owned by the same organization. So if you've owned additional businesses, whether they are no longer in business, gone bankrupt, or whatever the situation may be, it shows on your business bureau. It also shows public records of your interest filing, which also provides the creditor, whether you're paying on time or you're not, or any collateral that you're offering for any loans. So each reporting agency usually provides a free business credit report. So you can reach out to all 3 of them, and they typically will provide you with what your business credit report is. If you're new to your business, you probably won't even have one. And for a fee, they can provide additional information, such as agency summary of financial and non-financial accounts, public records of any security of state business registration, scores from other reporting agencies, and payment trends to payment index comparison to the industry form over the 12-month period. So we're going to talk about that index. The index is basically an idea of what your business score is. And we're going to talk about where is a good business score and where is a challenging business score. So these are things that you can pay NAV, Dun & Bradstreet, any one of those 3 bureaus that we talked about, Experian Business and Equifax Business. You can pay them to be able to help you put your business score together, and these are the things and resources that they will help you put and report on your business instead of you having to do it for yourself. I want to also talk about the range. So we talked about what the range is for a good, fair, and challenged personal credit score. You can see here there is a different index for the business credit score. So 80 to 100 is good. 50 to 79 is fair, and 0 to 49 is on the challenged side, again, anywhere from 80 to 100, you're going to get the best pricing. You're going to get little to no fees. Fair, your pricing is going to be higher, your rate is higher, and probably you're going to get some fees associated to it. And if you have challenged or 0 to 49, you're either going to get declined, or if you get approved, the fees and the rate is going to be really high. So that gives you an idea of what the score could possibly be. And I want to go back to additional questions that you might have for the business credit score, or any additional questions that you might have for the personal credit score. This is your time. I want to be able to give you a little bit of time left for the rest of the presentation in order to ask any additional questions that you have.
My suggestion is to have, if you have any questions, to please raise your hand, and then I'll select you so that you can get your questions answered. Or you can place in the chat. And also, if I have not checked you in, I will need to, so that you can receive the recording and also the slides, I need to make sure that you're registered for the workshop. So if you please reach out to me and we'll get that taken care of. All right, Ms. Erica, you want to unmute yourself?
Thank you, Tasha, and thank you, Sabrina, for such wonderful information. I wanted to ask about the business credit. Does the bank, will the bank share your business credit score with you if you ask? Because I know you mentioned there's a cost to getting that business credit report, but would the bank be able to tell me what they are seeing as a business credit score?
You know, that's a really great question, Erica, and it's so good to hear your voice. So to answer that question, and the reason why I say it's such a great question, we commingle the two together. So when we pull the business credit score and your personal credit score, it's going to give me like 850, 875, 840, and it's taking consideration both of them. So when we share, it's going to be the personal bureau and whether you're approved or declined, and it's going to give you that combined score, and you'll get something in writing. But it's unlike the personal request. If we pull personal credit bureau, where they send you the information of what your business score is, the real way that you can get that is by reaching out to one of the three or all three of the credit bureaus and see if they will give you an idea of what your score is. I am not aware of any resources like Credit Karma that is used, and hopefully they'll come up with something. And if anybody is on the call that can share, by all means, that kind of like does what Credit Karma does, that helps you through the three bureaus and gives you the algorithms, because it's not based only on algorithms, it's based on all of that additional information. So it's just kind of like a moving target. So it's tough unless you have, and here's an example, Dun & Bradstreet charges you $1,200 they help roll up their sleeves to help you figure out, you know, how can you make the strongest business credit score that you can get, and they do a lot of that for you, the reporting and all of the above, but you can do it yourself too. But the answer to your question is, it's unlike the personal credit score where we are regulated to send you who we pulled, what the score was, and a couple of algorithms to make it better. The business is not regulated that way. Business lending is not regulated that way. Great question.
So the business credit score can be inconsistent depending on what, it's not consistent, well, I should say it's not consistent across like all banking institutions. And so the way you're saying I guess Fulton Bank does it, would other banks do it the same way?
Yeah, so each bank has, just like there's three bureaus, to give you an example, Fulton Bank pulls TransUnion personally, and on the business side, we pull Dun & Bradstreet. So if you're a bank that pulls Equifax and you do, Experian Business, then it's going to be a different commingled number, and that's probably one of the reasons why they don't send out or it's not regulated. It depends on the bureau that's pulled for the business and the bureau that's pulled for the personal that commingles the two together.
This is very eye-opening. Thank you so much.
You're welcome.
All right, our next person
Great
will be
questions, Erica.
Nadine.
Yay, Nadine.
Well, good morning. Thank you, Sabrina, Tasha, and attendees. I want to say off the top, this is one of the most beneficial webinars that I've attended the entire pandemic, and that is in all true honesty. On the business credit, if you have challenged business credit, I hear you say that you can pay Dun & Bradstreet's to, help you get that improved, but you also said that you can use some of these strategies yourself. And I
Yes.
just wanted to say that if you do use them yourself, how do you kind of, I guess, judge how well you're doing in the process? Because I didn't want to go and try to get anything under the business just yet until I got, my business credit built up a little bit. So how do I kind of monitor my progress if I'm doing it myself, if that makes sense?
That's a great question. So thank you for your kind words. That was very encouraging, and it made my day. So thank you very much for that feedback on the presentation. It helps us, the Women's Business Center and Tasha and Deborah Gittens, make sure that we're on target to what your needs are in the community. So I thank you for that feedback. So the answer to your question, and two comments that I want to make. If there is a challenged business credit score, and that could simply mean you haven't built a business credit score yet, or you've had some challenges in the past on paying on time of an other business that you've owned or the current business that you owned, and you're trying to repair that. Your personal credit score is an additional way for you to be able to get over the hump for approval. So you want to make sure your personal credit score is as strong as possible, because in some cases, that is the only thing that gets us over the hump for approval, even if you don't have your business credit score established at this time. So if you do or are in that situation where you have a challenged business score, then you can work with Dun & Bradstreet, whether you pay them or not, or you will reflect any of the positive payments that you've made on the business and send that in to all three bureaus, depending on which one you're going to be working with, or pay them for doing it. And then they can give you more strategies to be able to increase what that score is. The more you report, the better off you are. The better your financials are for your business, the higher your score is going to be, because your business credit score is a risk factor. It will give us, the banks, an understanding of how much risk is associated with that. And that's why it's so important that your personal credit needs to be as strong as possible, because your personal credit can mitigate and overcome if there's some challenges there. Because at the end of the day, it's based on the relationship. So the other thing that I want to encourage you to think about, as you asked the last question, I don't want to do any lending or borrowing for the business until my score is as strong as possible for the business. One way that you can add to making your score as strong as possible, whether you choose Fulton Bank or anybody to do that, is by a business credit score. A business credit card. Not that I'm advising you to go out and get a bunch of debt for your business when you don't need it. But if you're doing things in the business that's an expense and you're just paying for it out of your account, you have the right to start, not the right, but I would encourage you to consider start using a credit card, put the balance and expenses on that, pay it off every month, And whether that is 20 months no interest or cashback rewards on a business credit card, you can either make money off of doing that and just pay it off every month, or you can give yourself 20 months on the product that Fulton Bank has, and we also have the cashback rewards for the business card. Whichever strategy that you choose, that also will help you start building your business credit score when you really don't need the loan yet. And I hope that makes sense.
Yes, that was perfect. Thank you.
Thank you for the question.
Very good. I think Larry Moppins, do you have a question? I see you unmuted yourself, so I want to make sure you can get your question answered. Okay. Anyone else? Questions? All right. So I have placed Sabrina Davis's information in the chat. I've also placed the next workshop, which is how to finance your business venture. Is this also, Sabrina, the C's, the 8 C's?
Yes.
Okay. All right. I know we have it titled differently, but it's going to be on April the 20th at 10 a.m. same time. I did place the Eventbrite link in the chat. One thing that you can do if you want to save the chat and you're on a computer, I haven't mastered the how to save the chat on the cell phone yet. However, if you're on a computer and you want to save the chat, which are with the links and all the other information, you may do so by, as if you were going to send a chat message to us. In that box, we're just to the right of the message where you're going to type your message here, there should be a section or an icon that has 3 dots. If you click on the 3 dots, another pop-up will open up and it will say save chat. That save chat, the chat messages will save, but it will be like in your My Documents folder or wherever your preset information has been predetermined on your computer. But if you save the chat, you'll have all the links, all of the contact information from today. As long as I have checked you in, you will be able to get a copy of the slides as well as be informed of the recordings as well. And the recordings can be found on YouTube. I'm a little slow right now, but I'm going to place the YouTube link for the Women's Business Center in the chat. And I am uploading all of the previous trainings as well. So that will be, they just keep an eye out on the YouTube channel. So if you subscribe to the YouTube channel, I'm not sure if you want to get the notifications. However, when the new ones do come out, you will be able to get that. So Tanisha, did you want me to explain how to save the chat again? You can unmute.
Yeah. No, I'm okay. I was trying to pressing the buttons and trying to figure things out. And I was like, oh, I did something. Hopefully they don't think I have a question, but I'm okay. Thank you.
All right. Look, sometimes I talk too fast. So, yeah. Anyone else have any questions or want to make a statement? Thank you, thank you, thank you all. I appreciate you, Sabrina, for always sharing your time with us. We do have our director, Erica Small-Cisco, on the line with us. Did you want to say a few things, Erica? I guess not.
Yeah, I'm sorry. I was trying to type to everyone. I want to say thank you so much to everyone. Also, thank you to Sabrina. And, we always have, a packed house when Sabrina comes. So it just tells you how much value you bring to us. And we appreciate so much the information that you share with us. I know personally it has improved my credit score and has helped me create my son's credit score. And now I'm learning more about the business credit score. So every time you come, it's just, you just bring us all of these wonderful jewels of pearls of wisdom. So thank you. I wanted to just make sure that everyone, when you get a survey from us, please respond. It's a short survey, just asking you to rate our speaker and also rate the information that you received, and just to let us know it's been of value to you. That will help us continue to get the funding to be able to offer the programs that the Women's Business Center is providing at no cost. So again, it only takes about probably a minute to 2 minutes to respond to it. So I ask that you please, please, please answer that so we can be sure to share that with the Small Business Administration and the Office of Women's Business Ownership, where we receive our grant funds. So thank you so much.
All right, Sabrina, there is a question as far as the location of the Fulton banks nationally.
Okay, nationally. So I'm so glad you asked. So we're in Pennsylvania, Delaware, New Jersey, Maryland, and Virginia, and North Carolina. You can't tell in Virginia that we're that big, but we're that big. We just make it easy to do business with,
Yes, very good. And thank you all for sharing your time with us as well. We appreciate you. And again, if you do, once you do see the survey come into your inbox, please fill those out so that we can share more information and workshops with you. It's just paying it forward. We're just going to try and pay it forward. So I appreciate you all. Thank you, everyone. Thank you, Sabrina. Thank you, all attendees. And until next time, we'll see you then.